Shortseller David Einhorn, who founded the hedge fund Greenlight Capital, has been notorious for dismissing Elon Musk's views and betting against Tesla stock. While he, along with other short sellers, completely trashed Tesla in the past by sharing negative information on the company and trying to make Elon Musk into the laughingstock of Wall Street, Tesla was luckily able to escape the downward spiral. As short sellers borrow and sell shares of Tesla, they push the price down, and coupled with the media and their power in financial markets, they can easily depress the share price of any company. While Elon Musk and the team at Tesla were battling to bring the Model 3 into mass production and bring forth a new age of electric vehicles and sustainability, the short seller cohort was able to take hold of and decimate Tesla's stock at a time when Tesla desperately needed to issue shares and raise cash to help fund the company's operations. In hindsight, Elon Musk later admitted that the company was just weeks away from bankruptcy. However, Tesla was able to claw its way out of the short seller vortex by delivering on the Model 3 production ramp. Elon Musk called 2018 the most difficult and painful year in his career, working 120-hour work weeks and sleeping on the factory floor. Otherwise, Tesla essentially wouldn't exist today. Meanwhile, at the time, Greenlight Capital had built up a large Tesla short position, and Einhorn continued to bash Tesla publicly in 2019. However, 1 year later, Tesla got its revenge, with the stock spiking 700% in 2020, absolutely crushing Greenlight's entire portfolio. At one point, Einhorn's net worth dropped him from billionaire to millionaire status, with Einhorn closing out his losing Tesla positions in early 2021. While the short seller stayed away from Tesla for the most part of the year, it appears that David Einhorn hasn't had enough yet and is ready to take on Elon Musk once again, just this week disclosing that he put on another massive short position against Tesla for the first time in a year. The feud between David Einhorn and Elon Musk goes back more than half a decade, stemming from the former's short position in Tesla. David Einhorn is well known for giving lengthy PowerPoint presentations where he breaks down the financials of companies that he believes are overvalued. Einhorn has a track record, especially in the banking sector, of identifying accounting issues at firms that eventually reveal themselves, sending the target company's stock significantly lower and at times into bankruptcy. However, Tesla stock appears to have behaved more like a short seller trap. At least over the last few years, the company went from being unprofitable. Many of Elon Musk's forecasts were late, and with a lack of imagination, it was difficult to see how Tesla could succeed among the giant incumbent automakers. Short sellers simply can't resist this and have grown to dislike Elon Musk and his tweets, bringing emotion into their investment decisions and finding a way to dislike the stock as well. Einhorn, who even drove a Tesla up until 2018, didn't renew his lease at the time, adding to the FUD about the company, especially as headlines picked up that a high-profile billionaire investor was no longer driving a Tesla. Elon Musk even offered to send Einhorn some shorts to comfort him through this difficult time, which he later did, or at least they were sent to him by the company Chubbies, for which Elon replied, "Put them on and post a selfie." Tesla bulls have long admired the company's mission to accelerate the world to sustainable energy. But in addition to this, Tesla has a few tricks up its sleeve, making the company quite a bit more difficult for the average short seller to understand. Not only are Tesla's products built around software, which add excess profit margin that traditional automakers don't have, Elon Musk has also structured the workflow of the company to be based on powerful software methodologies. According to former Tesla employee Joe Justice, who teaches and trains companies to adopt agile processes, he said that he's learned the most at Tesla, where the company is able to move at extreme speeds. In turn, Tesla is able to iterate at an unbelievable velocity, which allows them to fix problems and invent new solutions at a much quicker pace, not seen in the automotive industry, and perhaps not even in the world of software. But it's being applied to the manufacturing of very tangible products, meaning Tesla has essentially been able to turn hardware problems into software problems. This is one thing that seems to catch bears off guard, which is how quickly things can change. In the past, Elon Musk has spoken multiple times about S-curves, which is generally the shape of the ramp up of a particular component or product or technology that Tesla is working on. And he's basically said that while the S-curve shape is fairly predictable, when exactly the S-curve will occur is a bit more difficult to predict. Imagine that a software developer is looking at a piece of code that has a bug in it. While we can set as many deadlines as we want, sometimes the root causes of bugs are difficult to find and may take multiple iterations even once found to come up with a reasonable solution. But imagine that once it's fixed, it unblocks a bottleneck that can free up this exponential S-curve shaped process. And when you have hundreds or thousands of these curves coming together, it's quite difficult to make a prediction of when something will occur, but it's easier to see that when it occurs, it could be massive. In 2019, for example, David Einhorn gave a presentation at the Sohn conference where he showed a slide reel of so-called promises that Elon Musk had made which hadn't occurred yet. In January 2019, Elon Musk said he was optimistic about being profitable in Q1 and for all quarters going forward. The presentation was given in May of that year, and so it was clear that this wasn't true, and so Einhorn and the audience laughed at the statements, mocking Elon Musk. However, while Tesla was unprofitable in the first and second quarter of that year, contrary to what Elon Musk predicted, an interesting thing happened in the third quarter when Tesla turned quite a significant profit, and from then on hasn't looked back since, being profitable for all quarters going forward. This baffles the short-seller mindset, which immediately attributes these comments as lies by Elon Musk. However, the timing of Elon's forward-looking statements are difficult to predict due to how Tesla is structured, yet the patient investor is eventually rewarded. Now, in the same way that hedge funds are supposed to use short positions in options to protect their portfolios during a downturn, it's also important to protect your own data. That's why today's video is sponsored by NordVPN. A VPN, or virtual private network, aims to protect your data by creating a secure tunnel that will hide and encrypt your information no matter where you're browsing the internet from. People spend a lot of money on house insurance to protect their homes, health insurance to protect their families, and car insurance to protect their vehicles. But most of the time they forget about the security and privacy of their own personal data. And so for an extremely low cost, and even lower with this special deal, get a 2-year plan plus 1 month free plus a birthday gift with a huge discount. It's risk-free with Nord's 30-day money-back guarantee. Just go to nordvpn.com/TMIOTesla and use our coupon code TMIOTesla at checkout. Also, one thing I really like about NordVPN is that you can select whichever country you want to browse the internet from. So if you're traveling in another country and you need to access the US version of YouTube, for example, you simply select your country of choice and the VPN will make your computer appear as though it's in that country. NordVPN is the fastest VPN in the market with servers in 60 countries, and therefore they essentially give you access to the global internet and make it a piece of cake to change your IP address. So head on over to nordvpn.com/TMIOTesla and use our special promo code TMIOTesla to get a 2-year plan plus 1 month free plus a birthday gift with a huge discount. See the link in the description below. This past week, it was disclosed that David Einhorn's Greenlight Capital fund purchased 100,000 put options against Tesla's stock in the last quarter of 2021. This allows him to control about $105 million worth of stock, which is equivalent to 6% of his portfolio, and technically would be his third largest holding. That said, the way the 13F forms are structured, they don't actually disclose the market value of the options that he purchased. It just shows the value of the underlying stock, making it more difficult to estimate the actual size of his position. While the form indicates 3 separate positions adding up to 100,000 puts, we still don't know the strike prices and the expiry dates on these options. Based on Einhorn's previous options purchases, he's held some for at least a year in some cases. Therefore, it could have cost him a couple $100 per option, so potentially in the ballpark of $10 to $20 million to buy these, and if he bought them right after mid-October, when the stock was hitting its highs, he would currently be up on his trade. If we look back to his fund's past holdings, in the first quarter of 2020, Einhorn held 54,500 Tesla put options. So his current set of options seem to be much larger than what he was betting on with about 2 years earlier. At the time, he sold 22,000 of these options in the second quarter of 2020, when Tesla was hit by the pandemic, but still held 32,500 puts. However, Tesla came roaring back that year, rising about 700%, which would have contributed to a massive loss in this investment, hammering Einhorn's portfolio. His entire portfolio value fell from $8 billion just a few years earlier down to $1.7 billion as of the end of 2021. That's a massive 78% crash. In an interview with Simplify Asset Management from just a few months ago in October 2021, Einhorn stated that the results we've had over the last half-decade don't inspire confidence, and so we totally understand why people would choose not to want to continue to invest in us. He does follow on by saying that he thinks what his firm does makes a lot of sense, but as of yet, things have not begun turning their way. This is an interesting statement because he has once again selected Tesla, perhaps one of the most innovative companies of our time, to bet against, and says what his firm does makes a lot of sense. This even runs a bit counter to what Einhorn says earlier in the same interview. To paraphrase, he states that the market and companies have been focused on software and the cloud, and they've been underinvesting in tangible goods. He says that this underinvestment creates shortages in things that we actually need. Just a few minutes later, he also discusses inflation, stating that normally high prices lead to the build-out of more capacity, but in the environment that we're in now with the talk of inflation potentially being transitory, he states that it's very difficult for a board of directors to agree to investing more into the business, such as building a new factory, for example, especially if there are long lead times to actually build it, and in 3 to 5 years from now, prices may have fallen back down. Therefore, CEOs and boards of directors are more likely to, or it makes more sense to do the less risky thing, which is to simply do a share buyback, for example. Now, what's strange about his comments is that this dilemma doesn't seem to apply to a company like Tesla, where they are investing very aggressively in new factories in order to create these tangible goods that people need. Tesla doesn't care about inflation in the sense that it doesn't affect their long-term business decisions. Sure, they can raise and lower prices to help offset raw material costs, but as Einhorn mentions, companies are choosing to buy back shares rather than to invest in the future of their own businesses. And this isn't true at Tesla. Tesla's mission of accelerating the world to sustainable energy is what's driving the company forward, and so in 3 to 5 years from now, Tesla would have already made these investments, whereas other companies producing tangible goods, perhaps some of which are Tesla competitors, will look back and realize that they haven't invested enough in their own companies, in the business itself. So it's almost like Tesla is screaming out to Einhorn, checking all of the boxes of a great long-term business where management is doing exactly what you want, but Einhorn has instead decided to short the company, seemingly going against his own thought process. In a separate interview which occurred last month in January 2022, Einhorn discusses his company Green Brick Partners at its Investor Day event, but what he says is strikingly similar to what's happening with Tesla. To paraphrase again, he says it's very interesting that for the first many years that his company has been in the business, it was always tricky to get enough demand to sell houses at reasonable margins. But what shifted is now his company is essentially limited by production, and the question is, how many houses can they manufacture? So they've moved from a company that's limited by demand to a company that's limited by their own internal capabilities to execute. He even says that there's many things that could go wrong, like rising material costs and labor, etc., but he's very confident that his company will execute successfully. This revelation that David Einhorn has with Green Brick Partners seems to apply even more so to Tesla, since Tesla has always been production constrained, and this will likely continue for many years to come, since electric vehicles make up just a few percentage points of the overall vehicle market, which is shifting rapidly from fossil fuels to EVs. He seems to like his own business very much, even though there are many external factors that could change the dynamics, but he's willing to give them the benefit of the doubt. For some reason, however, he doesn't grant the same latitude to Tesla. Perhaps he doesn't believe that Tesla can execute, but at this point we've now seen that even in any environment, whether it's the pandemic, part shortages, chip shortages, battery shortages, you name it, Tesla has been able to rapidly grow its production, up 87% in 2021, and they appear to be best positioned out of all the automakers for future growth, signing supply contracts around the world, and even scaling their own material sourcing and production capabilities. If one was looking at this objectively, it would seem strange that Einhorn accepts this ability to execute as a positive for his own company, but doesn't seem to acknowledge these positives for Tesla and has decided to short it instead. It seems that he has once again missed the forest for the trees. So why do you think David Einhorn has decided to short Tesla again, even after being burned so many times? And do you think his most recent put options trade will be successful this time round? Be sure to check out our NordVPN sponsor link in the description below. Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.